To get a sense of the outlook on the automobile sector in particular and the economy in general, we're joined now at the India Today studio at the World Economic Forum here in Davos by the Chief Executive Officer and Managing Director of the Mahindra Group, Dr. Anish Shah. Dr. Shah, welcome. It's great to have you with us.
Thank you.
It's sparkling weather and the sun is out, so it's nice to be here.
It is beautiful.
We're seeing at this time rising inflation, increasing commodity prices, and interest rates going up. All these factors playing out simultaneously, to what extent, in your view, are they dampening your outlook for demand for what you're doing across the Mahindra Group?
So we've seen a lot of challenges, Rahul, over the last couple of years, and commodity prices have been on a significant rise. Our sense is that it depends a lot on what the geopolitical factors will play out. If things do settle down there well, then we may be well past the peak, and the actions that have been taken already by the RBI and the government will help settle things well. At this stage, the question is whether inflation goes higher than what it is. My sense is it probably will not, given some of the actions that have been taken. Demand has been reasonable so far. We have not seen a drop-off across the various industries that we've been in, and based on that, I'm cautiously optimistic.
From a customer perspective, huge queues, waiting periods. I mean, I was looking at the waiting times for some of your models, including the XUV 700. I mean, it just goes on and on. As a result, customers are double booking. It's quite a mess. I mean, how long do you see it continue in this fashion for? What are you doing to try and reduce these waiting times?
So the key driver of that is really the demand we've seen for the vehicle. We knew it was a good vehicle, but the demand has actually even surprised us. We sold 50,000 cars in 3 hours, and we're still getting more than 11,000 bookings every month. If you look back at any other launch over the last few years in this segment, there are very few launches that have gained anywhere close to these numbers, and most have been far lower. So this is again a testament of the car in itself. The challenge for us right now is to ramp up production much faster, and we are on path to doing that. There have been supply chain issues which have exacerbated the problem as well, and those have eased up a fair bit. They're not completely gone as yet, but they have eased up a fair bit, and our teams have been doing various things to find solutions around that.
So can you talk a bit about that? Because this whole idea of semiconductor chip shortage has been plaguing several sectors, and especially the automobile sector over the last couple of years. What have you done to try and build some resilience in those supply chains, and to what extent do you think you've succeeded in going from just-in-time to just-in-case?
The supply chain models in the past were just-in-time. They were also largely single source with high volumes to help reduce cost, and that worked for many years. What we've seen as the world has changed over the last 2 to 3 years is there are various shocks that keep coming into the system, and therefore a single source, for example, isn't a great idea, because if you take a specific incident during COVID where a plant in Malaysia was shut down, that impacted supply chain for semiconductors across a large number of auto businesses. And if you don't have a second source, then that impacts production to a much greater level. So one is dual sources. Second is more standardization of parts across various models, wherever it's feasible. Some things are obviously not feasible, but in many cases it is feasible. These are all items that take longer lead times in the auto business, but our teams have been now working at it for the last 2 years and have got a lot of solutions around it. It's also sourcing chips in various different ways, relationships with chip makers and our auto tier 1 component makers. In the past, you always worried about the health of your direct suppliers. In this world today, in supply chains, you got to worry about the health of their suppliers and the health of that supply chain, and at tier 3 level as well. So it's a combination of all those factors. I think we're getting better at it now. Our teams are a lot more resilient to address any shocks that come about, and which is why it has eased a lot overall from our standpoint.
Shanghai was locked down for 7 weeks. There's a lot of chatter about how the Chinese economy is slowing down, production being impacted. How have you seen this play itself out, and to what extent is it impacting you?
So there again, because our teams had been looking at various what-if options, we've seen a lesser impact of that. Yes, we obviously have seen impact of that. But also, just to give another example, a few months ago we sourced materials for our suppliers in advance and sort of had that in waiting in case there were any disruptions. Things like palladium, platinum, rhodium, which are important for catalytic converters and some of the other parts for automobiles. So we're starting to look at how do we reduce any potential shocks with what-if scenarios, with optionality planning, and that's making things easier. That at the same time, though, is increasing cost a little bit, because each of these scenarios and optionality does have a certain cost associated with it. And that, combined with commodity prices, does have an impact on overall prices for consumers, which we're hoping will be mitigated as we go forward. But in the short run, it does have an impact.
So while input costs are going up on the one side, you also got interest rates going up, and as a result, do you see the appetite, which on the back of the pandemic seemed to be quite immense, being hit on account of the fact that loans for automobiles could and are getting costlier and will get costlier the next few months?
We are not seeing that as yet. Part of it is because the last 4 launches we've had have been very successful. That may be a reason in there, but we are really not seeing any let-up in demand as yet for our models.
Let's talk a bit about this whole push towards electric mobility. And we're seeing 2 things. One is a very bullish outlook that some groups like the Tata Group have on how EVs are not just the future, they're the present, and they're pivoting heavily in that direction. Suzuki Maruti seems to have taken a slightly different view, where while they've got some models in the pipeline, they're also thinking that that's still out in the future a few years. The Mahindra Group seems to have been a bit of a laggard, at least from the outside, in terms of getting its electric act in order. How are you trying to gear up for the electric revolution?
So we've been a leader in this space for many years, and we've understood battery management systems, how electric cars are used, needs of consumers in this space. Our approach was to really leapfrog directly into born electric models, and that's what our plans are at this stage. We'll see a lot more of that in the July-August timeframe when we do a complete reveal of our plans in electric. But today we are very confident of regaining that leadership based on the models that we have planned for and the quality that we see overall. Because electric, again, is a powertrain, and it's the rest of the car that matters as well. So the success of our recent launches gives us a lot more confidence.
And those are gas guzzlers?
Not always. If you see some of our new petrol engines, they're actually very efficient.
Relative to gas guzzlers,
yes,
relative to electric mobility, to the big vehicles which require conventional fuels, and therefore if the demand for those is as high as it is, how do you see the appetite for electric mobility? Not just in terms of expressing a desire, but actually making the switch.
I think the appetite will be very high, because as you said, people do want electric cars, but they do want the design of the cars. They want the interiors to be as good as you can get in ICE cars. So all of that has to be there. But beyond that, there are 3 factors that really will drive it. One is cost of ownership. If electric is going to be a lot more expensive, then that creates a certain pause. Second is range anxiety, the ability to address that. And third is the infrastructure that comes with it. So it's all of these 3 things that will drive adoption of electric. So we do feel electric is here to stay. The question is the speed of adoption. And we will be ready with a wide range of electric options for our consumers, cars that can take a leadership space, just as the XUV700 has done. And we will continue to have the ICE options as well. And over time, my sense is electric will phase out ICE.
For the past few months, we've seen 5 international automobile companies announce their departure from India, including Ford, Harley-Davidson, MAN Trucks, your motorcyclists. Is that just demand and supply, the forces of market playing themselves out, these international companies being unsuccessful, or as some who don't like the way the India story is going at this moment would suggest that this just shows that international companies are now beginning to lose faith in the India story?
Well, I would look at it a different way. 20 years ago, the Indian auto manufacturers were written off, saying that you've got all these international players coming in, how can these Indian manufacturers survive? Right? Today, the Indian manufacturers have actually shown they can not just survive, they can thrive. And they can actually beat the international manufacturers at their own game, despite the scale and size they have outside India. So I would look at it as actually an endorsement of the fact that the Indian automobile manufacturers have actually done a very good job and have succeeded in the marketplace. They've understood consumer needs better, they've delivered better products, and that's something we are seeing with the sales and the order bookings that we have.
While every CEO has a certain amount of continuity in his business plans and takes forward what he inherits, what's the larger macro vision that Anish has for where you hope to take the Mahindra Group in terms of your USP or your stamp, your vision, which is different from what you inherited?
So I would start on that, Rahul, saying that what I've inherited actually is awesome. If you look back, let's start with the values and the purpose of the Mahindra Group. Right? That's what attracted me to the group, and that's really who we are. So that DNA for us will continue. No change in that. We are very careful about what we change. The mantra we use is continuity and change. Okay? The second part is, if you look at from when the Nifty was established in 2002 till August 2018, Mahindra was the best performing stock in the Nifty. So we've had a long history of value creation, a long history of financial discipline. And that's something that we've actually brought back. So there again, in a way, it's continuity. While it might look at change in the short run, it's continuity. The third aspect is entrepreneurship. The businesses that have been built in the past, Tech Mahindra, Mahindra Finance, Holidays, Life Spaces, were all built by entrepreneurs within the group. And that's again what we are moving forward with now. The key change that we are driving is faster scale, faster growth of our businesses. Because in the world today, that is required. What we are also driving is agility. In the world around us, if large companies are not agile, they will not survive. So those are things that we are driving a lot more now.
So apart from the companies that you mentioned, what are your big, bold new ideas?
Today we've got our 4 core businesses: Auto, Farm, Tech Mahindra and Mahindra Finance. All 4 are very well positioned, and all 4 have significant growth opportunities: EV and Auto, Farm Machinery. On the farm side, Mahindra Finance is going through a significant transformation. Tech M is playing in a number of new cutting edge areas from a technology standpoint. And then we've got 7 growth gems, each of which has a clear path to $1 billion of market cap in the next 2 to 4 years. So we're really driving scale in these businesses, plus looking at digital platforms to get the group future ready. And that's our game right now.
So we've seen the Tata Group, for example, with its digital play, with limited success so far, try and catch up with some of the digital startups. It's been awkward. How are you viewing what's happening in terms of a digital transformation of the consumer interface, not just at the back end in terms of transforming your own business processes, but in terms of having a super app, for example, reaching out to your entire galaxy of consumers?
We've taken a very different approach because we've really tapped into the startup ecosystem to create value. And let me share examples of what has worked already. We had a business called Mom and Me in retail. We had then acquired Baby Oil, which was an internet business, and merged with FirstCry. At that point, we had somewhere like a 40% stake with the merger. The entrepreneur who ran FirstCry was an excellent entrepreneur, and he wanted to take the business forward. Other investors came in. Today, that business is valued at far greater than at the time when we merged the businesses, and we're very happy with the valuation that we got for our shareholders. Similarly, a business called Porter, which is later stage, or rather earlier stage than FirstCry, but there again, we merged one of our startups with Porter. And today the business is doing very well, has a number of other investors in there, and we are creating a lot of value for our shareholders. So what we are doing is taking strong assets from the Mahindra Group and leveraging the startup ecosystem to say, can we build this into a much bigger business? Not controlling these businesses. We're not taking majority stakes, but that's how we're creating value for our shareholders.
Mm-hmm. On the question of alternate fuels, we're seeing demand surge for CNG. Do you see some of these becoming mainstream ideas going forward? Do you think, while of course they're environment friendly, they'll continue to remain on the fringe?
I'd say too early right now, and it's worth piloting some of these, seeing how they work out. Similarly, even in electric, battery technology is going through a lot of changes, and we haven't settled on the final technology for batteries as yet, but that's part of the evolution process.
If we zoom out for a moment outside of what you're doing at the Mahindra Group and get your sense of the economy's trajectory on the back of the pandemic, I mean, there are headwinds because of geopolitical tensions, what's happening in Russia and Ukraine, the impact on the rest of the world. To what extent do you think this is pushing back the growth that everyone was hoping for once the pandemic ended?
I do feel that the Indian economy is poised better than the rest of the world, because our inflation is far lower than what we've seen elsewhere. The government has been very proactive in taking measures, and hopefully that will get the inflation back to the levels where it was. We are seeing a lot of demand from consumers that has not dried up even through the challenges that we've seen in the last few months. And if I were to look at a longer term trajectory as well, as you think about geopolitics, India is actually very well positioned. A lot of companies globally are looking at India and saying, that's where I want to be. We've got a democracy. We've got a government that is proactive in bringing in investors from outside, a large market that's growing, great demographics. So while we will see certain blips in the road and we will continue to see shocks from various places, we have to be ready for that. On balance, India is actually very well placed.
Okay, you are technically in a silent period, so there are certain questions we don't want to delve into, but we got a general sense of how you view the temperature at this moment. Anish Shah, for your time, thank you very much.
Pleasure to be around. Thank you.
Thank you very much. Thank you.